Good morning, everyone, and welcome to the Quantum Leap Morning Pre-Market Analysis and Trade Plan Setup for Friday, March the 11th, 2014. My name is Doug McKay. I am the founder and head moderator for Quantum Leap. We're a self-organized learning environment. We have a private Skype room that has been in existence for over 4 years now. Each morning we come together and we do a live go-to and take a look at the market structure, where we are within the auction, and then set our trade levels up and our targets for the day. If you're interested in finding out more about Quantum Leap or Stealth Trader, you can send me a email. I don't know why this keeps doing this to me, at d.mckay@stealthtrader.com. McKay is M-C-K-Y, or send me a Skype request, contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. We go through a normal routine each morning, going through the macro to the micro, look at the key numbers, then look at the trends in the different time frames, and then we get into some more in-depth chart analysis. So if you're watching this on YouTube after the fact, you might want to skip ahead to where we set up our trade levels and targets for the day. Before we do anything, I have to do the legals, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan. All right, so let's just take let's start with a quick review of yesterday, because obviously yesterday our secondary hypothesis kicked in, and I want to talk about that for a minute. So let me just bring up a chart from yesterday's levels. So yesterday we were really looking for, a rotational day, and I was looking for chop with a little bit of a push upward to test that 68.75 area and possibly go up and hit our main target, which was up at 69. We could not break outside of value and outside of range, so we came up into our trade level. The seller stepped in and they held us in. Now, initially, I was thinking, okay, we get a rotation down and we come down and test this 55 level, and we hold about above 55, and we get chop in the upper distribution in around what was our first target, which was the 6250 area. Well, that was the main hypothesis, and we were looking for chop in this upper area with a push maybe up into the 71. But I did say, if we got below 55.25, which was our key line in the sand, that you wanted to be selling. I think the phrase I used, sell till your heart's desire, or something along that fact, into the 50-50, because I really felt that we'd come down and test that 50-50, because that 50-50 was right at the value area low at 50.25, and with a push down to possibly test that 46. I wasn't expecting more than 46, but we said later in the video, you always have to set your levels for your lower targets, and of course we had our lower targets down at that 39, which was a key CLVN for us, where we would, if we broke below that, we'd get a rotation back down into that triple distribution, which was all centered around that 25.25, 29.50, and 35.25. And of course, we broke that 39, and what did we do? We went down, hit the 34.50, and hit the 29.50, and hit the 25.25. And that's why we always have an if that then strategy for you. Nobody's going to be able to tell you 100% what the market's going to do. In fact, if they get it right 50% of the time, that's good. But as long as you're prepared for what the possibility is and what the market's going to throw at you, then you're not surprised. Then you're not trying to scramble to figure out what do I do now. You know, we knew what to do because we knew that that 55.25 would define whether or not we'd get a rotational day, whether or not we'd get a bigger rotation down and set up for a trend day. And obviously, we ended up having a pretty big down day. So I'm going to talk about more of this. There's lots I want to talk about, but we got to get the key numbers out of the way. So let's go ahead and do that. Well, I think the big thing now is bears are back in control. Okay, we're below the 1837.75, which means we are in a bearish year because the 1837.75 is the year open. There's a couple key levels down here, but they're really not going to show up on the monthly because we basically have blown through our monthly low. We just put in a new monthly low overnight down at 1814.50. So I'm going to go ahead and change that. And you know, we're below all our previous month numbers, so we're really looking at where we were 2 months ago. But let's go and take a look at what happened in the day. We actually had higher Globex numbers, and that was one of the reasons why, you know, we were holding value up in that 66 area. And I was figuring, okay, if they're going to hold this, they're going to just chop it around and probably try to push higher. And you know, I was under the impression that, you know, when we got so close to that 1900 that we're likely to go for it, and the market's going to throw a curveball to you. You just got to be able to, you know, take a swing at it. So we opened Globex 65.75, had a high of 67.50, had a low of 57.50, and we opened up to 65.50, right at the value area high and the range high from the prior day. So we opened auction basically just in range, and then, you know, we ended up breaking the IB and setting up for a trend day, and went down and trended. Large opening swing, 66.50 to 61.50, and you know, pretty normal initial balance, but we did a make and break on the initial balance. 66.50 for the high, 59.50 for the low. All our intraday numbers were lower except for our high, which was right at the previous day high. We could not break out of the range and out of value, and then we rotated it back down. So all lower numbers, 1230 number 35.75, RTH low 23.75, our RTH close 27.25, and our VPOC shifted lower at 28.50. Range was you know, fairly large, 19 and just over 19.25. I'm sorry, these are our 20 days. Our RTH range was 42.75, and I think that's the third largest range that we had so far this year in the RTH. 43.75 in the full session and 10. So I mean, you know, up until the time we opened up in the RTH, it looked like it was going to be a rotational day. 20 days have expanded out slightly because of the big range, but nothing, you know, huge. We did do a break to the low side inside of the pocket at 9:45 Central, and we did have OTF participation with 2 million in the RTH and 2.3 in the full session. Taking a look at the daily report, we've got our full session high so far at 1832 and full session low at 1814.50. So our 20-day ATR targets are 1836.25 to the upside and 1810 to the low side. And really, I'm looking at that 1807 area, and I'll show you why. That would probably be where we'd get a move down to if we do see some weakness. We had PPI and core PPI. They came out slightly better. We've got G20 meetings all day, so we've got headline risk, you know, in the market, and then we've got University of Michigan consumer sentiment. Remember, this is a subscription-based service, so sometimes you know, this comes out a little bit early. So just be careful in that first 30 minutes of trading. So I want to do a couple things. First, we want to take a look at the overall trend, see where we are, see if there's any break on the trends. So the monthly, You know, we're below the prior month low right now. We're coming down to test this trend line. Move down to test the 9 EMA on the monthly will take us down to 1778.23. The overall trend is still intact. Just always keep that in mind. You know, we might say that the high is possibly in, but the trend on the monthly has not been invalidated. Going over to the weekly, we broke through the 9 EMA and we're coming down and we're trying to break below the 20 SMA on the weekly. So, you know, this is Friday, and this will be a good telltale sign if we're getting a possible, you know, trend break on the weekly if we break below this this 20 SMA this week. We haven't closed below the 20 SMA since going back to the week of 08/26. So that's you know, a long time since we've had a break, and even then we broke right back above and continued the trend up. Really, we've got to get below the 1784 level. The 1784 level is going to be a key level coming up, and I'm going to show you why. Going to the daily, well, the daily is showing some weakness coming in, and you know, we were taking a look at a couple different things. There's a measured move. There's an asymmetrical head and shoulder pattern that measures down to that 1776 area. There's also, if you want to take a look at the Fibonacci retracement from this last swing low up until the high. You know, we're below. Sorry, come on. Oh, my mouse just got stuck. Okay, there we go. You can take a look at the fact that we broke below the 38.2, a 61.8 retracement is going to bring us down to 1793.26. Now this is a curious level because if you've been in homework, we've been talking about the fact that we've got this naked cross that I've been talking about, and the fact that I didn't think we'd get there, you know, right away, but I said eventually we're going to come back and retest this 1794 area because we've got a naked cross on the daily, and you know that fits right with the 61.8 retracement on this last move up. So just keep your eye on that. In terms of the trend, we do have a bit of a violation below the 9 and the 20. We've got a 9 crossover against the 20, so we are seeing some weakness. We don't have slope and separation yet, so we don't know if this trend is going to continue. We do have a technical gap right here, and likely to come up and close that gap somewhere probably in around that 1839 to 1841.75. You can see that you know, resistance was here in around that 1841.75. It was our support, so you know, a move back up to test that level and close out the technical gap on the daily is quite possible. Taking a look at the geometric chart, well, you know, we've broke below the center line of this shorter term downward sloping fork. We're coming down to test the lower line of the upward sloping fork. A test down there will take us down to 1810 and a quarter. So there's that 1810 again. And you know, if we come up and test the center line of the lower sloping, the smaller downward sloping fork, that'll bring us up into that 1831.50, 1832 area. I would even think 1834, because that's going to be the 1834.50 is that microcomposite VPOC. But that's about all we can you know, determine. You know, I'll move down now that we've rejected the upper line of the longer term downward slope. A move down here will take us all the way down to that 1772 area, and we do have an energy point down here at 1764. But you know, right now, I think the key level that we need to hold is this 1810 area. I'm even thinking that 1807. So let's go take a look at where we are in terms of the shorter time frame trends. You can see that we've got a pretty strong trend. They sort of tried to close the technical gap that was created here on the 4-hour, but we've seen some more weakness. Did we just go down and make a new low? No, the low is still 1814. So we still have this technical gap to close out. Actually created a secondary one right here. We've got a naked cross right up here at 1847. So this is giving me some information that the overall down move is going to get some retracement. Let's take a look at what it looks like on the 30-minute, but the trend, we are getting slope and separation to the downside on the 4-hour. Let's go over to the 30-minute. You can see we created that technical gap, came up and closed the technical gap, but we do have slope and separation to the downside. And we have rejected the 9 EMA from below, so we are seeing weakness coming in on the 30-minute. Going over to the 5-minute, and you just got a bunch of chopping consolidation right now. We need to hold above this this 20 SMA right now. We had a naked cross that we created with this move up. We came down and closed that naked cross out, and we need to hold above the 20 SMA at this 1850 level. So let's take a look at it on the composite. So we're still inside of the overall balance, but one of the things that really troubles me is the fact that we broke out of that balance overnight and came down and broke this, what I consider to be a key area at 2125. So now we're below 2125 and we're outside of the current balance area. So now we got to start looking at, okay, where's the next area where we're going to find some support, and really there's nothing there. If we can't get, if we can't hold this 1850 area, and you can see that this 1775 was the value area low of this balance area right here around that 25.25, and then your value area high for where they broke out of this balance down here around that 1774.50, where they accepted value before they pushed up higher to that 25. The value area high there is 19. So we're right there. This is a critical spot for us in terms of if we see a bigger retracement. And it's not going to be the end of the world, and the sky is falling type scenario if we come down all the way down to this 1774.50 again to pick up buyers. And we could come down here very easily and then bounce again. But what concerns me is we don't have anything to hold us up right now until we get down to this 1807. And so, I mean, that's going to be my main target. If we can't hold 1818 and we go down and test the overnight low and take out the overnight low at 1814.50 and break below that, because then you're breaking below this this range low, which once we move back up into this balance area around the 34.50, I think that you're going to move down. They're going to have to come down here to this 1807.50 and probably come down and test the 1800 level, this key CLVN at 1799.25. Now, I did change my start date on my composite. My start date is now on that swing low, which is the October the 9th, 2013. And you can see that the most accepted composite VPOC, or the comp VPOC, is down here at the 1774. And remember, that was that key level 1781.50 in the March contract before we changed over to the June contract, now adjusted down to this 1774. So if we do not hold 1800, I would get short with your first targets at 91.25, 84.50, but the big number, and I would try to hold one down here because we are, when you get this close to a composite VPOC, a long time price acceptance area, they're going to look for buyers down there. They're going to go down there to find buyers with conviction. So this 1774, remember we have that, that naked cross down there as well. There's a whole bunch of reasons why we come down here. So if you break 1800 today or next week, get short into the 1774 and try to hold for a bigger swing down because you'll get paid for it. It might not happen in a single day, but I think you'll see a rotation down to that 1774. They'll probably come up and test the 1800s from below a couple times, maybe even push back up into the 1807, but keep short in that 1800 into 74 with the 91 and 84 as your key spots of possible support. Today, though, we've got to look at it on a much smaller time frame. So we still have this triple distribution. It bothers me that we keep coming down and around, but we're not spending any time in here. And you can see all the wicks and tails. Let me just move this to the back here. You can see all the wicks and tails. Every time we came down here, we're not auctioning this area properly. And I kept on saying we need to come down and auction this this area. And I thought, okay, so now yesterday's the move down. Now we're going to get stuck in here today. So that's my main hypothesis if we get above 21 1/4. If we cannot get back above 21 1/4, then I'm thinking we're going to see some further weakness and a rotation down, to test that 1450 overnight low and possibly down to the 1807. If we can get back up into the 21 1/4, then I'm looking for a rotation back up into this triple distribution around 25 1/4, 29.50. And 35, and just to chop around with possible push to test that 39 CLVN and the microcomposite where they tried to hold value in the last couple times they came down here at that 38 1/4. So I mean that's the big level. Maybe a push up if we get some positive headline news out of the G20. Maybe a push up into that 41, 42 area. But I don't see much more than that. Our overall value area low, I'm going to bring this all the way over here just to see where our value area low is, and our value area low for the overall, I'm going to bring this up to the front so I can see it, is right here at 34.50. So that 34.50 is still going to act for like a magnet. So if we can get above 21.25, I would get long into 25 1/4 with the possible rotation and a bunch of chopping around, with the big destination being that 34.50, which will be the value area low for and a test of the balance zone that we've broken out of. But if we can't hold 21 1/4, look for a rotation down towards that 14.50 and 1807 being the big destination. So let's move our chart numbers over and get set up for our levels and take a look at it on a smaller time frame. So our overnight high, 1832. And our overnight low, 1814.50. And our overnight VPOC, which I don't think we're going to see shift, is at that 1850 CHVN. All right, we can get rid of this. Now, obviously, we've got this this 21 1/4, which is just below the value area low and the range low from yesterday. Our range low from yesterday is at 23.75 with the value area low at 24. So what I would be doing is I'd be using this 21 1/4. Sorry, let me just expand this out a little bit more. I would use this 21 1/4 CLVN, and I would use that as a trade zone for getting long or getting short. Now, I want to make this perfectly clear, is that if they break above it, I would get long into this 24, 23.75 as my first target. And I would make it 23.75 as the target. But if we get up here, okay, or we come up and test it, make sure that you get clear indication that they're rejecting that 21 1/4. Wait to get short, okay, on this 21 1/4. If we come up, and test the range, even pop into the range and come down and try to break out of the range, don't short into the 21 1/4. Wait to break below the 21 1/4 before you get short, and then just make sure you got a clear break for the move down towards this 14.50 to take out the overnight low. And that will be our first target below. I mean, our overnight high is all the way up here at 32. We've got lots of targets in between it. So just, again, if we come up and test it right on the open, make sure it's a clear rejection. I would probably even wait to get short until you're into the 19s, okay? Because then you pulled into that 1850 area, and a likely probability, 96% probability of taking out the overnight low or overnight high. I think the overnight low is going to get tested. And then if we break the 1814, there's really not much below us. There's a little LVN or CLVN right here at 1150. I'm going to go ahead and mark that on. And I would use that as a trade area for getting short or adding on into the main target below, which is going to be this 1807. This is going to be my main target if we get rejection at 1807.50. Okay, with a push through to 1800, and it's really going to be 1799 1/4. And then, of course, if we get below 99 1/4, your target is 94 at naked cross and CHVN. Is it 94 1/4? It's 94 on the naked cross, so I'm going to do 94, and then 84. Which is a naked VPOC as well, and you got a naked close down here at 87.75 as well. And then the big extended target below is going to be that 74.50 area. All right, so that takes care of hypothesis of a rejection and a break below the overnight low at 1814.50. If we get above the 21.25, get long into our first target, which is the value area low and the range low, and then if we break above that, you can even do an add-on to that, because I think we'll come up to take out the naked VPOC with the overnight high. You've got 29.50. You've got 29.50. So I mean, you got a couple really nice juicy targets. You got the 25.25, 29.50, and I've just tried to run long because I think if they get inside of the range, they're going to push through, which is going to be my main target above at that 34.50, because that 34.50 has been so important. Howard, how am I doing for time?
About 10 minutes to open.
Okay. Okay, and then above the 34.50. Now remember, you got targets at 28.50, 25.25, 28.50, 29.50, 32, and 34. So you got a whole bunch of targets up here. I would manage my stop and really look for the rotation all the way up into 34. The big number above us is going to be that 39. Okay, and then if we get above that 39 area, the main target above that is at 41.75. Okay, this overnight highs, and then above that 39, then you're looking at sorry, you've got 43 as a value area. There's really, not much up here other than that 50-50. And I look for a move up to the value area high here, 52.25 and an 80% play. So we'll put our target really at 50-50, because that's, the key level that I keep watching there, just front running the value area high. And then if we do get an extended move, it's all up to that 64.50. And this will be our, we'll make it 62.25, because that's the HVN in this zone, 61.75. Remember that 61.75 a couple weeks ago? Kept on being important, so we'll put that as our extended target. It's really 64.50, because that's the microcomposite VPOC. All right, so there's our levels. I'll post this this chart in the various rooms. Let's take a quick look at where we are in the Renko Keltner channel. 20. Well, that can't be right. All right, so center line on the Keltner is at 19.25. We're currently trading below it. A test of the lower Keltner channel will bring us down to 18.13.25. That'll take out the overnight low. I'm thinking that's looking, we're still seeing weakness coming into this open, and I think that's the likelihood. If we get above that 19.25, you've got the 21.25 area, and if we get above that, then you move up to test the upper Keltner. Is going to take you into that 25.25. Likely by the time we get there, it's going to be closer to 24 in that value area low. Really quickly take a look at the gold futures. Just want to keep harping on the fact that We're still in this validated cup and handle. We can still chop around in here, but we're holding into the 1300s. We tested that 1324.90 area yesterday. We're currently trading 1318. Let's just take a look at what that looks like on the composite. Put a profile in here. So we're trying to hold in around this 1320 area. Currently trading 18. We're in this this distribution. I think the same thing as yesterday. If we can't get above this 1321 area, we're just going to chop around here, come down and test the lower ranges from yesterday with 1315 and 1311, with the other side of balance being down at 1306 value area low, and the big number being 130160. And then a move down, you've got those 1294 area, 1291, 92 area, and then the 1284, 1285 area. I mean, same numbers we were looking at. Above 21, then you're looking at 23 to 2450 area, with the other side of balance being 29, and above 29, 32 and 33. And I'm not expecting much more out of that in gold today. Just more chop within this distribution zone here. I think we're going to come down and actually probably test the lower area of this distribution. Anyway, that's going to be it for today. As always, trade well, trade safe, and we will catch you on the flip side. Remember, we got news coming out, University of Michigan, so be careful in that first half hour.